Toronto condo prices surprised me. Last month, average prices rose from $707,000 to $721,000, despite high inventory and weak demand. Has the Toronto condo market finally hit bottom? Stick around to the end because I've spotted some looming challenges that aren't yet visible in the resale data. But first, let's take a look at the resale data to see what happened. Let's start with inventory. Over the past month, the number of condos on the market dropped by nearly 4%, bringing the total down to 5,884 suites for sale. That's a significant shift worth noting. Let's put the inventory numbers into context. While inventory dropped by nearly 4% last month, it's important to account for seasonality. And when we focus on October alone, the picture changes dramatically. Inventory is unusually high for this time of year compared to previous years. Now, let's shift to demand. In October, 1,162 condos sold, a substantial 35% jump from the previous month. But again, looking at this through a seasonal lens tells a different story. While demand is stronger than in the past 2 years, it still falls short of the levels we've seen in prior Octobers. Let's break it down. Dividing supply by demand gives us a ratio that highlights the market's overall strength. The good news, that ratio improved last month, signaling some stabilization, even though we're still technically in a buyer's market. But here's the catch, this number is highly seasonal. Comparing this past October to previous October reveals the bigger picture. The market remains relatively weak despite the month-to-month improvement. Let's talk about how long it's taking to sell a condo. And last month, the average was 32 days, longer than usual. But is that really abnormal? When we compare it to previous October, it becomes clear this is an unusually long time to sell compared to prior years. Let's turn to another key metric, months of inventory. This tells us how long it would take for all the condos currently for sale to be absorbed at today's demand levels. Right now, it's sitting at 4.9 months, a historically weak number. What these stats don't reflect is the shadow inventory of new construction assignments, properties being resold before they're even completed. Many of these sales aren't recorded in official data because they aren't listed on the MLS but sold exclusively through private channels. This means the true inventory on the market is much higher than what's reported. On top of that, many new construction buyers are facing serious challenges. Projects that sold at market peak for over $1,600 per square foot are now appraising much lower as they're near completion. Buyers are struggling to secure financing, and some are walking away from their 20% deposits. This hidden inventory, combined with these heartbreaking situations, adds even more pressure to an already weak market. Many of these buyers are taking losses in new construction, are likely investors, and once they've been burned, it's hard to imagine them coming back anytime soon, if ever. Treating new construction condos as investments has some serious challenges, especially when it comes to cash flow. Here's a typical example, a 500 square foot condo in a new building priced at $700,000. With a 20% down payment, your monthly mortgage would be around $3,100. Add a $460 condo fee and $300 in property taxes, and your total monthly expenses for this one-bedroom condo is $3,860. Meanwhile, you can expect to rent this one-bedroom condo for around $2,700. At first glance, you're running at a loss of $1,160 per month. But when you factor in the $1,100 in mortgage payments that you're paying down, you're technically breaking even on paper. However, that doesn't account for other costs like vacancy, repairs, depreciation, or commission. The reality is landlords are mostly betting on appreciation for their profits, and that's where the risk increases. What if you get a tenant who stops paying rent? Here's what happens. You file for an eviction with the landlord and tenant board, and you're looking at a 6-month wait just to get a hearing. During this time, the tenants continue living in your condo while you cover all the costs, even if the hearing goes perfectly. The eviction process itself takes another 2 to 3 months. Once the tenant is out, you'll likely have additional expenses to prepare the unit and find a new tenant. In total, you're looking at a 9-month ordeal before you can re-rent your condo. So between negative cash flow and the risks involved, is buying a new construction condo really the best investment choice? Personally, I don't think so. What about you? Let me know your thoughts in the comments below.